10-year note yields get us settled below 2.5%. It's only done that a handful of times in the last couple of months, and today is no different. But we had a very tight range given all the news that's been dancing around the market. We really traded about 3 basis point range, 247 to 249-ish. We settled at around 249-ish, and that's kind of where we stand on the high of the day, but certainly a settle below 250 is a rarity. At least it has been since the market made those lows way back when we put those low yields in. And I think that right now the market's kind of trying to configure, are we making a run towards those lows down near 240, below 240, or are we going to try and revert back up to 260, which is really the new range, the 240 to 260 range. Today we settled below 250. It's, like I said, it's rare, so maybe the market's starting to lean towards maybe breaking out to the downside. And when we think the market's going to break out, or we kind of can get an idea that the market's leaning one way or another, we tend to see volatility firm up. And today it didn't necessarily rocket higher like we saw in the VIX index, where volatility is much higher. We did see it nudge higher. I think a little more caution than anything else. Bond volatility has been hovering right around that 14-day moving average for several sessions, which is rare. Typically it gets to that moving average and then makes a break either higher because of some unforeseen event, or it breaks back down to the lows, which is typically where we are, because obviously the bond market's been stuck in these ranges for long periods of time. So right now we get this settle below 250. We see volatility holding steady. Likely means the market's anticipating some kind of a move towards the outer edge. We got to 260 not too long ago. We reversed back off that very quickly. Maybe the market now anticipating a move down to 240 or lower. That obviously would be a break out of the range and sort of outside of expectations, and should bid volatility in Treasury space. Obviously, we're just seeing that just hold steady and wait, kind of that wait and see mode. But again, it's not going lower, which in Treasuries means it's actually higher. And lastly, what caused all this commotion today? Well, yeah, China and talks of raising tariffs on China and them not coming to Washington to help sort out all this mess. It seems to be gotten a little over its skis. You saw in equities how volatility spiked and equities just got crushed. Everything kind of crept back, normalized a little bit as the day went on. Equities actually threatened to go back to unchanged on the day, not quite there yet. And Treasuries, though, didn't really see that big move back towards unchanged. Yeah, Treasuries were off the lows, all 2 basis points of it, but we never saw a sell-off in Treasuries that would have caused you to believe that this was done, over and done with. Treasury market's still looking ahead with a little bit of confusion or a little bit of angst, whereas the equity markets are kind of trading flavor of the day. And I think that right now, if you can get that positive Chinese news back, it takes equities sort of out of this bear moment that they had. But Treasury's a little more weary and want to wait and see for some kind of results. So as we begin the week, Treasury's seeing higher prices, lower yields, but obviously we've got a lot to go on here. Market watching very cautiously as we wait and see what happens by the end of the week. Will those tariffs go up on China? Will there be more commotion? We don't know yet, but the equity market seems to be discounting it, whereas the Treasury market, well, it's not so sure.